Hi, everyone, and welcome to Fraud's Financial Impact on Dealers, Bigger Than It Appears. This automotive news webinar is brought to you by Experian. We're delighted you're with us for this presentation. I'm Emma Hancock, host, strategist, and moderator at Automotive News. Before I introduce our speaker today, a navigation tip. We encourage you to ask questions at any time. Just type them into the Q&A box on the left side of the webinar window and then hit send. I will steer your questions to our speaker toward the end of the session. Joining us today is Jim Maquire, Senior Director at Experian Automotive, and now I'll turn it over to Jim to get us started.
Emma, thank you so much. I'm so happy to be able to speak with you and your viewers today. You know, I'm at Experian Automotive, and we empower our clients with data-driven insights to achieve better business outcomes. But today, we're focusing on an important aspect of that mission, which is helping to effectively combat fraud risks. Well, why? Fraud's a threat that impacts every participant in the automotive ecosystem. It includes lenders, OEMs, and consumers, and especially dealers. So in today's session, we're going to cover insights about how fraud is changing, not just in the volume of the fraud, but in how it's impacting the day-to-day auto business. To deepen our understanding of the current and emerging fraud landscape confronting dealers, we conducted a study with an international research firm, HarrisX. Now, they're a longtime Experian collaborator. We've worked with them for over 10 years. And they helped us to craft a study to make sure that the insights are based on direct input from a nationally representative sample of dealer leadership. That's GMs, F&I leaders, and owners managing the real deal flow every single day. It's important because as fraud schemes become increasingly sophisticated, it's critical to assess their scope and impact in the evolving risk environment faced by dealers and the service providers. We really haven't seen a study that did a good job of quantifying the day-to-day of what dealers were affecting. So that was our goal, to uncover these insights and improve how our industry addresses fraud. And internally, we also want to use that information to create better fraud solutions for the industry. So let's jump right in. Nearly, too often fraud's been treated as the inevitable cost of doing business and a bad deal here and there just being absorbed into the margin. But dealers are telling us that fraud is rising. 70% believe that fraud's getting worse, and nearly 9 in 10 say they're very concerned or very concerned about fraud. So these high levels of concern argue that a new approach is required but the concern is not the story, right? It's the impact. What we're seeing and what the study shows is that fraud isn't an isolated situation, it's systemic. So we intended these insights to be useful for the industry. And since these insights and others I'm about to share informed and guided our roadmap for experienced dealer solutions, I thought I'd just share that very briefly. We call it Fraud Protect. I'll come back to this topic at the end of the discussion to share how we've acted on this. But in general, the first step in addressing fraud is to define it. So as I go through here, let's talk about the different kinds of fraud because it comes in many forms. And what is a challenge is that it's got many faces. And the first we're going to talk about today is first-party fraud. So it's when individuals misrepresent their own information or intentions in order to commit fraud. Generally, we're talking about their intent to pay, to repay a loan or a lease. But this can manifest in different ways, such as straw borrower fraud, when someone applies for a loan on behalf of another person who may not qualify, concealing the true identity of the actual borrower and potentially leading to loan defaults. But another risk is planned bust-out fraud. Now, this is a scheme that uses built-up credit to rapidly tap every available dollar, perhaps multiple vehicle loans, and likely other large credit lines, because why stop at the vehicle fraud if we're going to bust out anyway? Let's go all out. And that includes cash advances, balance transfers, and it happens simultaneously, right? All this happens prior to abandoning the accounts. And sometimes they even abandon the identity on those accounts, which brings us to the next fraud type, which is third-party identity fraud. This is commonly referred to also as stolen identities, right? Using someone else's personal information without their knowledge to commit fraud. Now, naturally, this requires stolen or forged documentation, like driver's licenses or other proof of address or even income. So, this is something that the industry has been facing for quite a while, but fraud today isn't just about stolen identities, it's about constructed profiles, which brings us to the next identity type, right, which is synthetic identity fraud. Now, this is where you combine real and fake information to create a new and fictitious identity to misrepresent creditworthiness. And the aim here is to secure loan approval under false pretenses. Again, fraudsters are becoming increasingly sophisticated in their approach, and here, whether they're working on their own, being guided by AI or by what they find on the internet, or whether they're part of an organized fraud ring. Essentially, the impact is being felt across the industry. So when we focus almost exclusively on identity, which has gotten a lot of headlines, rightfully so, we risk overlooking other key vulnerabilities. And that includes, for instance, income-related fraud. So this category of fraud runs deep. It's trying to influence a lender's assessment of their ability to repay a loan. And that includes things like employment status, misrepresenting to meet loan qualifications criteria, such as falsely claiming to be employed when you're unemployed, working for a particular company when you're not. What we've seen in the industry is that there are fraudulent employers that have been set up exclusively for trying to verify fraudsters, whether it's the status of their employment, the amount of money that they bring to the table. And they're out there as a service, basically fraud as a service. Now, that's one type. That income is an important part of it, whether it's fabricated by someone putting down that they've make it a little bit more because they're trying to qualify for more vehicle, or whether it's much deeper, right? Forged documents, providing fake or manipulated income documents like pay stubs, W-2s to falsely indicate higher earnings. Now, absolutely, we know that AI is making this more effective than it ever has been before. Documents that pass visual inspections for format and data consistency under casual review are far easier to create than they have been in the past. And those experiences we've had of looking at documents and realizing, well, this doesn't look quite right. That look quite right is going away because it's easier to produce something that's virtually identical at first glance without looking into the data underneath. So both these, first identity and now income manipulation, they're at the center of many of the fraudulent deals that we see. But there's an entire another category to talk about, which is vehicle-related fraud. Specifically, we're talking about trade-in vehicle deception. And that trade-in vehicle is misrepresenting the condition, the value, or the ownership status of a vehicle offered as the trade-in. And it occurs, of course, to inflate the value, right, by concealing vehicle issues or additional issues, such as ownership, even. That can be accomplished with things like title washing to obfuscate the ownership or existing liens on the vehicle, thereby affecting the terms of the new loan. And another way to do that is VIN cloning or altering that vehicle's VIN to disguise its true identity. It's often to conceal theft, salvage status, or other issues to mislead lenders and buyers. So when we talk to dealers about this, what we have heard is that it can create an issue that extends far beyond the initial transaction, and the loss carries on. I've taken in a vehicle that was misrepresented. I've sold it to a consumer because it seemed like a great thing. But when I find out there's a problem, now I have to go back to the consumer I sold it to. One dealer group told us they not only reimburse the consumer for the vehicle, they take it back to try to collect whatever they can of the value of that vehicle, but they also end up, for goodwill, giving the consumer another car altogether. So it just expands the scope of the cost incurred. All right, so these are the different fraud types that the dealers talk to us about today, in these three categories. So Emma, I think this is a great chance to ask a question of the people that have dialed in, which is what fraud types are they most focused on preventing?
Mm-hmm. We doing a poll?
Yes, please. So
I'm I'm still caught. I have to say, I'm still caught up, Jim, on this. That there's fraudulent companies just set up to look like employers of fraudulent people, like fraud as a service. Crazy.
Yes, it is astounding the amount of time, energy, effort, resources that are being put into committing fraud. But a vehicle is an attractive target, right? It's a high value item that's extraordinarily mobile. And so people are trying to do everything they can.
Yeah. Okay. Our survey. I'm looking at the survey.
All right. So I'm looking here. It looks like identity related fraud is coming in at the top. With 65% of the respondents, vehicle-related fraud and income-related fraud are tied about. No, look at that. Vehicle-related fraud pulled ahead. So interesting. Identity-related fraud at the top of the list, although it's starting to balance out a bit. Interesting. So here's our next step. I'm assuming, have we got all the answers in, do you think, Emma?
I'm here. I think we're close. Maybe give it. Okay. Well, yeah, they're still coming in because I see the way it's coming in, and I actually feel like a different one might pull ahead because it's possibly easier right now to get away with.
It could be.
Okay, I think we're good. What do you think?
I think it's interesting. I think the trend is there, right? So what I'm going to share next is what dealers told us they're most focused on in our national study. And interestingly, it's different than what people on the meeting today are sharing. So let me jump to the next slide. All right, as we talk to dealers, surprisingly to us, frankly, income-related fraud was the top category of auto finance fraud, very different from our poll. 86% say they were focused on this category. And it's driven by forged income documents at 62% of the responses and income fabrication at 50%. So this is something dealers are confronted with every day and top of mind. The next one, again, no surprise, identity. Identity schemes such as synthetic identity at 44 and third party at 43 and straw borrower tied at 43 right next. So while income and identity fraud remain the top dealer priorities, trade-in vehicle fraud is still a concern. Now, at the dealership, often hands-on inspections drive confidence, right? But there may be hidden issues with vehicle status or history that affect that vehicle's value. And so it is important to be able to dig in. And some of those hidden things, forged bins can be hard to identify. But interestingly, it was at the bottom of the list. But of note, though, all these fraud types can be amplified online, right? Our shift to e-commerce enable transactions to make the consumer experience better, lower the friction, increase customer satisfaction. It also increases the need for protection against these new vectors for fraudster attacks. So what's the cost of this? What's the impact of this? We asked dealers, and here's what they shared with us. On average, dealers are facing 12 fraudulent deals that they've successfully identified and avoided in the past 12 months. That's a good news. Bad news. On average, in the last year, 4 deals were completed in the past 12 months, later identified as fraudulent. Now, nearly half of those resulted in losses between $10,000 and $20,000 per transaction, and 31% report even higher losses. Now, if you look at the timing, the detection typically occurs within 1 to 3 days for over half of these dealers that reported. But you don't need very many of these bad deals to materially impact your month. So timing shows much is identified quickly, but at what point do they incur these losses? I'll talk a little bit about some anecdotes that we've heard from the industry, but let's look at the next slide that shows when the dealer says, "Aha, there's been a fraud, and I've got the loss that has affected me." They most often occur when a lender issues a chargeback or a traded-in vehicle has conflicting ownership or lien issues. Those are both about 46% respectively. So dealers are catching fraud, but not all of it. And that lender chargeback generally not the thing that's coming in within the 3-day window we just saw, right? That's where the dealer caught it at the point of sale, most likely. Something didn't come through. But the very first thing the third thing after the first two is when customer financing is not approved. So yes, that is a sign that something is bad. On the other hand, it's a sign that likely I don't have that car any longer. I gave it to the consumer and they went off and the financing's not approved. I'm going to ask a question about that after this. But first, the next one here is traded in vehicle has a cloned VIN, right? So this definitely is an issue. It's when the dealer is incurring the loss, they realize, oh, I've got this real problem, which can be this chain reaction of loss. When informed that a sold vehicle was previously stolen, yeah, that's a problem. That person didn't own the vehicle or the history of that vehicle shows that it's worth far less because of being branded as a stolen title. When that customer's down payment fails to clear. So payment fraud is increasingly something that we're hearing about, but it's a tale as old as time. The check bounced, literally. So it's something that there's definitely challenges with in the industry. When filing an insurance claim and paying that deductible, we're well down the road, right? We're well down the path by the time I filed an insurance claim, just like I'm well down the road 30, 60, 90 days when a lender issues that chargeback. So interestingly, I'm so happy that there are 6% of dealers who are able to say, my business does not incur losses from fraudulent transactions. So I'm very pleased with their fraud prevention efforts. They must be doing a heck of a job. All right, so here's what I want to ask the folks on the phone right now. This idea that I'm incurring a loss when the customer financing is not approved, it leads to what we call in the industry spot delivery, right? I have given the car over to someone prior to them, to the financing being finalized. So my question for this group, because we did not ask this question in the survey, is what percentage of your dealership deals use spot delivery? So that's the next question we'd like to ask everyone. And I'm very curious because, again, we did not ask this question. But when we saw this outcome being so high up the list about customer financing not being approved, it begs the question. All right. So we have people across the spectrum, literally less than 1%, all the way up to greater than 50%.
Yes.
As the answers are coming in, and I understand there's a bit of a lag as they come in. So I see here, quite a few is the majority at the moment are less than 1%. 36% of folks are saying less than 1%. Now, every dealership's in a different circumstance, right? So whether they're comfortable with doing this, whether it's a customer that they've worked with for years, or unfortunately they think it's a customer that they've worked with for years. Again, there's that stolen identity issue. But everyone's practices are going to be slightly different. So I expected to see a range of answers. But there's still quite a bit of spot delivery occurring. 21% of folks are on the survey right now are saying that it's more than 50% of their deals. So that is interesting because it does create this window, right, that we just talked about for when customer financing is not approved. All right, so let's talk about the impact of that. There's an expense, right, of this fraud. And one of the things that we identified, the very top one, was when a lender issues a chargeback. That was the very top answer. So we asked dealers to tell us what they estimate on average, what percentage of indirect fraudulent loans are charged back by lenders to dealers. And this is an estimate based on their own personal experience, right? There's no verifiable, quantifiable number in the industry, which is why it's a great polling question for our survey, I should say. So let's take a look. Dealers told us that on average, they think about 20% of indirect fraudulent loans are charged back to them by lenders. So that is a meaningful amount of dollars, to be sure. So when I talk to dealers about fraud, often I hear, well, the lender helps me absorb some of this risk. If I've done my part, then they're checking on their side, and we share the risk together. So the dealer's estimate is that it's about 1 out of 20%. So the other people that are sharing this cost with them are insurers. So we ask the next question, how does it look when we look at insurers versus lenders? And so the answer is that dealers report fraud losses are only partially covered or absorbed, with most saying insurance covers between 1 to 50%, and lenders absorb a similar 26 to 50%. So unfortunately, recovery beyond these ranges is rare, and it leaves dealers to absorb a substantial portion of the losses. In fact, many reported 0 losses being covered. It's based on the terms of your relationship with these entities. But when I talk to dealers about this, you really start to understand how important these relationships are. Some dealers say they've avoided making insurance claims in order to keep their rates low, or even to keep their coverage, since insurance coverage is required to conduct business in most states, and they don't want to shut down the store because they lost insurance coverage. So they're not necessarily reporting the full impact on the insurance side. On the lender side, it's so important for both of these partners to understand the requirements is key to improving the results, right? One common request that you see is lender stipulations. And so I have a question that we ask next about stipulations. And the idea here is, when does the dealership validate customers' income or employment information? So the number one list is only when there's a reason to suspect potential fraud risk or inaccuracy. 31% of dealers, though, say they check it on every deal, regardless of circumstance. So there is consistency there, and there is a virtue to that. But 23% said only when that lender requires it, or a lender requires it, so when there's a stip. Of note, there's no dealers that said that they never validate income or employment. So it's a common practice, of course. So when we talk to dealers about this, we hear, and rightly so, that first category is following sometimes they see an actual flag, and sometimes they're following their gut. The dealer's spidey sense is tingling, telling them there's something here and we need to increase our scrutiny to address these concerns. It increases friction on the one hand. On the other hand, it helps protect the dealer, and following their gut does make sense if something seems wrong. However, obviously, today's fraudsters are designing schemes specifically to avoid raising obvious red flags. So that the gut instinct, while important, is clearly not keeping all the bad deals from going through based on what dealers are telling us. So what are the biggest challenges with these fraud verifications? So we asked that question of dealers. The answer was, number one is balancing fraud prevention with that seamless customer experience. They don't want to shut down the pipe, but they want to make sure the good deals get through. It's followed by the verification. The next topic was issue verification delays that frustrate customers. We know that it can make the deal last longer, which makes it certainly inefficient at the dealership. On the other hand, it can create customer dissatisfaction, right? So the length of time in the F&I office is one of the things that has been talked about for years, trying to smooth that through. So, absolutely, we all understand that. However, several of these challenges speak to lender interaction, whether it's this next one, limited support or visibility from lenders when fraud is suspected, long wait times from lenders or on the back and forth on suspicious deals, or further down the list, lack of access to the same tools that lenders are using. So these talk to an opportunity, right? Progress can and has been made by dealers who are investing in their lender relationships. So I'm talking about discussing topics such as local fraud trends, or the best practices for preparing deal info to achieve speedy funding decisions. Having that relationship in place, getting feedback from the dealer, from the lender about the dealership's fraud process and policies, super important. It helps not only to avoid fraud, helps to avoid those chargebacks that are so costly to the dealer. Now, one of the other challenges, I should say here, is false positives causing delays. 33% said false positives cause delays or lost deals even with legitimate customers. So the fear of false positives can steer some from investing in additional fraud protection. But it's important to know the opposite should be true, right? The most sophisticated fraud prevention tools can better confirm a clean deal and remove doubts that basic fraud checks just leave unanswered. So it's a matter of priorities as far as across this whole list where we're investing time, where we're investing in resources. But I will say that there is a better way to accomplish this that we're going to talk about a bit. And as far as those priorities go, how do we address that first one, that balance between customer acquisition and fraud prevention? Well, it has to do with their priorities. A large majority of dealers believe customer acquisition and fraud prevention are equally important, reflecting a balanced approach to growth and risk management. Now, I'll tell you, I've been in this industry a long time, and based on my experience, this is a welcome shift from the past attitudes, right, where they were prioritizing customer acquisition sometimes above all else. In fact, a separate experience study on the consumer side, which I'm not sharing details of today, but I will send out a link. It also found that today's consumers not only expect verifications, they actually build consumer confidence with the businesses that provide them, because it shows the business is also interested in protecting the consumer's information. So the understanding from consumers that they need to validate and verify their identity when they're buying a vehicle, the second most expensive thing that the average person buys in their lifetime, the expectation is there. And the good news is, from a dealership perspective, they're not choosing between growth and risk. They're trying to balance both. So naturally, everyone at the dealership has a stake in avoiding fraud. But we wanted to know, we asked, who leads the effort at your dealerships? So, well, let's take a look at the answers we received. I'm happy to say that, no surprise, responsibility for fraud management remains centralized among finance and risk leaders, with limited operational involvement from other dealership roles. But the good news is 28% of dealers said they have a head of fraud or risk management. That is a job title that is growingly more common, right? Because that role has not always been as prominent in the industry. So that is great news for us all. The dealerships are really investing and focusing and having someone in that role. No surprise that the GM and the dealer principal, this is where the buck stops, right? So they have responsibility, but they're not necessarily the front line for the majority of these. And the controller and office manager having responsibility for fraud, certainly understandable. An observation about this is that if you wait for the fraud controls to happen, by the time the deal gets to the office, the deal jacket is completed. It's probably too late, right? So hopefully that office manager, that controller is involved in the deal workflow, which we are going to talk a little bit about workflow. Now, that said, I've got a question for this crew here on the phone today. We have a polling question. Who is primarily responsible for fraud mitigation at your dealership? So we've got the same categories here, and we'd love to get your insights.
I was just going to jump in and say that, so that's interesting. So dealerships are hiring heads of fraud and risk as a standalone role. And
some of these folks really are on point where they're and I talk with them all the time. They're interacting with dealers directly. They are being called in on individual deals. They're helping provide those best practices at individual dealerships in their organization, and they're helping to understand how to interact with lenders, with insurers, with law enforcement, a really important stakeholder in this whole thing. So I see here our number one answer. And Emma, you're sharing the results at some point with the audience so they can see them too, yes?
Yes.
Okay,
Once it's done, yeah, it gets shared out.
Outstanding. So the number one right now is head of finance and insurance. Number two is general manager on this list. And number three is head of fraud or risk management. So again, so pleased to hear that people have that role in their dealership, in their organization. Increasingly important. And those people are certainly earning their keep, I'm sure.
Yeah, Jim, I was going to say also, I liked your point about how it builds confidence, having the steps, for those dealers that are going through the process on every single deal, that it actually, the consumer is welcoming that. It's a good point.
Mm-hmm. It's a change in consumers' understanding. Just as we're all becoming used to e-commerce, right? The e-commerce world in general, whether you're logging into your Amazon account or you're logging into your bank account or any other sort of credit card account, you're having to prove your identity. It's becoming commonplace, and so it shouldn't deter our industry in any way.
Yeah.
All right. So again, in our results here, number one is head of F&I, and number two is GM, and number three is head of fraud or risk management. All right. So I'm going to go back here to talk about methods for capturing information. How are dealers addressing risk? And we talked several times in different circumstances where false identities are an issue and the documentation that goes along with them. So what we asked was the current dealership method for capturing customer driver's license information. So most dealerships rely on dedicated driver's license scanners or photocopying to capture consumer ID data. No, but wait a second here. These add up to way more than 100%. How can that be? Well, it's because different methods are being used in the same dealership, likely at different times in the sales process. The process of checking identities and validating, checking the ID and validating the identity is important at different stages of the process. And we're going to talk about that. But it's likely that a driver's license being photocopied at the beginning of the process, and then once the deal progresses, you go to scanning, et cetera. I do want to point out to everyone listening today that using the salesperson's mobile phone to capture the image, that method is potentially secure if you have an app that specifically does that. If it is literally the salesperson taking a photo with their phone so they can email it or submit it to the system in some way, that is not a best practice, right? Because that person has PII on their phone that is a potential leak of information, intentional or not. So you do not want to have photos of IDs sitting on a salesperson's mobile phone. Receiving that license image or data directly from consumer, great. Email, maybe not great. Email is not necessarily the most secure way to do that. It's not just your email system that may have potential protection holes, it's the consumers. So not a best practice to receive that information by email. All right, so all these different methods are used in different circumstances. The most obvious circumstance is verifications for someone sitting across the desk from you versus verifications for remote customers. So our next polling question has to do with that. Do you run the same verifications for remote customers as you do for those in the showroom? And the answers are: we run the same, we run more checks on remote deals, we run more checks on the showroom. Based on your tool sets, I see different things. So I'm curious to hear what these folks have to say.
Yeah.
And we really. I live in the state. I live outside Chicago. I live in Illinois, where IDs are now driver's license available on my iPhone. It is a valid form of ID in my state, and businesses have the tools to be able to accept them more and more. But in firsthand experience, talking to dealers, talking to my local retailers who check IDs, they're not necessarily up to speed yet, right? They haven't necessarily adopted. But that is a new method that will be coming out that we all get to adjust to. All right, so the results that I see so far, about neck and neck between we run more checks on remote deals and we run the same verifications for both, but literally 0 answers saying we run more checks in the showroom. It's interesting because I know that those with driver's license scanners in the showroom, a physical one, are challenged to do that remotely. Right? It's not impossible based on what setup you have. You must have an alternate way of capturing that information and having it shared with you. Maybe we're jumping back to that email from the consumer. I'm not sure. But right now, the winner is we run the same verifications for both at 55%, and we run more checks on remote deals at 45%. All right. Interesting to hear from the industry. How we're addressing it. So this question about when are these verifications needed is a topic I want to shift to, and it's a complex one, but it's one that affects how we frame up an understanding of fraud, whether it's using these insights or whether it's providing solutions across the industry. So we talk about workflow, which is the right-hand side, things in blue here. At the dealership, you've got the test drive versus the sales process versus the trade-in process versus F&I, vehicle delivery, remote deals, and vehicle transport, right? And you might do a different type of verification at each of these steps. So the first one is the test drive, right? You're giving the keys to a car to someone. Oftentimes there's a salesperson in that car. There's a myriad of reasons to validate that person's license. Make sure that they're qualified to get in that vehicle and drive it, right? But there's also identity verification. So the driver's license validation could be as simple as it matches the format for my state, it appears to be the person. Identity verification is the next step. It's a little deeper, where we're looking at other data sources to confirm that person's identity. That's the best practice, right? A multi-layered approach. So you're not looking at just the license, but the identity. Why is it important? Well, aside from protecting that vehicle, you need to protect that salesperson that's getting into the car. I talked with a dealer who his very first test drive as a salesperson, and his very first automotive job, he was escorted out of the car at gunpoint and been forced to walk back to the dealership. It was an unfortunate circumstance. The guy talks about it, in a dreadful way to this day. So you want to make sure your salespeople are safe as you're putting them in the vehicle as well. Insurance verification: make sure that person has insurance that can help in the case of a problem. On the sales side, there is an opportunity to do all the different verification steps that are required, all the way through income and employment verification, if it matches your needs, your policies and procedures. For those 31% of dealers who are checking income and employment on every single deal, and you know you're going to do it, there is a reason for spreading the fraud checks across the workflow. It means that by the time we get to F&I, you're going to have a better understanding of what's going on. You are going to be able to quote better deals for this person because you have more information about them, and you're going to have a level of confidence in what's going on, and you're going to avoid the unwinds that can happen. On the trade-in, if it's just a trade-in, you might want to check the license and identity of the person that's bringing this car if they're there to sell you a vehicle. But trade-in ownership verification, incredibly important. In fact, we received a question about that. I see here about title-related fraud. So making sure that we understand the that vehicle, it belongs to the person that says that they own that vehicle, that there's no outstanding liens against it, and that there is no title issues with that car that can affect its value. Really important to do when you're examining that vehicle at that moment in time. Of course, the F&I office can be doing all these things. And as we saw, the F&I folks are the ones that are 100% the most responsible, according to the poll that we took for fraud issues. So no surprise that a lot of the paperwork, a lot of the compliance, a lot of the fraud checks are happening there. But it does slow down the process if you wait until you get to that step to do that. Let's pretend you're running a relay race and you're counting on that last person to be the one that wins the race for you. So you really do wish to avoid counting on that person. I see here that I've not been advancing the slides to sort of correspond to my conversation. So here we go. Now I'm caught up. So on the F&I side, we do often see them doing all the steps in the process. But again, if you can pull it back and have other people engaging, that's ideal. Vehicle delivery. So I've purchased the vehicle. Maybe this is the first time I'm in the dealership because I've done everything remotely up till now. So certainly you'd be validating the license and identity at some point. If you wait until vehicle delivery, okay. But for sure, insurance verification is what's happening along the way. Proof of insurance is required in most states. And in some, the actual vehicle's addition to the policy must be verified. So there's a lot to do there, and make sure that you're doing it properly to be compliant. Then the next step here is this remote deal that we just talked about. How important is it to check on everything, all the way through? So you need the tools that can allow you to do that. I'm just going to focus on all these before we get to the last one. Every dealership is unique, right? Every dealership has their own best practice. Every dealership has their own way of addressing this. And so we encourage people to look at fraud solutions there are two things. One, that meet your need at that stage in the workflow. And number two, that are configurable to make it not just easy to access, but for you to be able to create a consistent process. Consistency drives efficiency. If everyone is used to turning the crank on all the fraud checks consistently, they're going to happen more quickly. They're going to happen, and you're going to get more consistent results, and fraud is going to be deterred. So incredibly important. This last one, vehicle transport, has been in the news quite a bit lately. So what I'd like to point out on that is we suggest check that license for the transport driver. If they're willing to share their license with you and their identity, then likely they're more likely to be the person they say they are, appropriately picking up the vehicle. It's very possible that they might share a fake ID, just like we talked about with consumers. Well, all the more important to put your tools to test, to work, to help them, to help verify them. If they're not willing to validate and verify their identity, are you willing to put a vehicle on the back of their truck and see them drive away? So we encourage that as a way to move forward on this particularly quickly rising type of fraud that we read about in the industry. So, okay, we've talked a lot about verifications and workflows, but let's sort of boil it down here. We are using those insights in our world at Experian with our product called Fraud Protect. Fraud Protect is our solution for auto dealers to quickly, easily, and securely verify the customer's identity, income, trade ownership, and now insurance verification. So it works like this. Dealers use their CRM to send customers a link to self-verify using their own mobile device. Customers validate their driver's license, including biometric scan. Then they verify their identity, including step-up verifications if needed, automated, right? So we'll do a one-time passcode, for instance, on the mobile phone if required. The dealer can select to verify any or all of these different verification types based on their configured workflow. And on average, if a consumer were to do all these steps, it takes between 90 and 120 seconds to complete all the verifications, less for the individual steps along the way. The results are immediately returned to dealer systems via a secure link for use in moving through the workflow. And I would share that, this solution is already in use at some of the nation's largest dealerships, dealer groups. And we recently announced this insurance verification coming soon. So if you're interested, here's a link that you can use to check out Fraud Protect. So I'm gonna sum up the key takeaways from today. I'm gonna simplify it in a few things. Verify early, be consistent, and not conditional. All this helps to reduce the number of surprises after the deal is done. This number one step of developing a consistent fraud process, once you've mapped it out, you can work to optimize it, right? This can include spreading steps across the sales process, which brings security throughout the deal. It avoids those late stage unwinds, which are productivity and morale drains, frankly. This plan should include securely confirming identities up front. And the longer you wait to verify income and employment, if you're going to do it, the greater the productivity cost of any failed verifications and basically unwinds at the end. And of course, it's easy to understand that confirming trade-in vehicles details early, including ownership and outstanding liens, helps to avoid risk and adds velocity to the deal. So overall, the best fraud strategy helps you approve more good deals, not just stop the bad ones. But that's the balance we all have to strike. So I understand we have some questions, Emma, that have come across.
We do, Jim. Great presentation. I'm just, that last chart that you went through is great, but sad, isn't it? That it's that complex just to do business, just for dealers to do business. It's so layered, even with the transport column that I'm sure is a new addition. And then you layer in the fact that consumers are already not happy with the amount of time it takes to purchase a vehicle. It just, wow, it's overwhelming. So I learned a lot from this presentation. I'm sure our audience did as well. We've got about 11 minutes left. I'm going to go through a couple of questions here that we have. We have a question here from Maha. So this is about title related fraud. You did talk about title washing. You sort of covered the whole gamut of different types of fraud. She's asking, in general, title related fraud when purchasing a vehicle. So right. I'm guessing that's more for the consumer. Is there any checks or balances? I guess, yeah. It's
for the consumer and it's for the dealer, right? Because often they're purchasing a vehicle from a consumer. And so making sure to check on that vehicle's history, confirming that vehicle doesn't have outstanding loans, using solutions to confirm the ownership of that vehicle couldn't be more important for the dealer. It's an important part of the profit that's in the deal. And the risk, as I mentioned, just grows, right? So if I've taken that vehicle in and it turns out to be worth less, then I've got a bad deal. If I sell that vehicle to a consumer with a misunderstanding, but it comes up after the fact, oh my gosh, now I've got a goodwill issue, I've got a profit issue. So absolutely something that it should be a standard part of every dealer's process when they're taking in a vehicle.
Yeah, or else it becomes sort of like a counterfeit dollar bill. You just keep passing it, and eventually someone's going to get stuck with it. You don't want it to be your customer.
Yeah, that's exactly true. And unfortunately, it's not only the cost, but it's the reputational cost for the dealer, right? So that's when they go sometimes overextend themselves to generate goodwill, which to keep the customer whole, because their reputation is so important in their community.
Yeah. All right. So I just wanted to also mention Russell had asked about the presentation, just for everybody watching today and registered. The full report that you've presented and talked to today, Jim, is going to be sent out after this at some point. Is that correct?
Yeah, absolutely. In fact, I've just shared a subset of the report today. And there's the complete report with all the findings that we had from our dealer survey that will be shared with folks, which, by the way, does include a definition of all the different fraud types that we talked about today.
Yeah, that's great, because I feel like it's something people are going to want to reread and maybe show to their staff. Okay, another question here, and this is really just around time, because that's something that we spoke to towards the end there with, how do you get through all of this and not slow down a deal? So what's the fastest way to reduce fraud without slowing approvals? Like that, it seems like they're opposing forces.
So I'm going to jump back to that best practice, which is started early in the process. The real crunch time is in the F&I office, right? Where there's a bunch of paperwork to be filled out. There's a bunch of things going on. And so the sooner you can validate that consumer in the process along the way, it spreads out the, I'm going to use the word pain. It spreads out the pain, right? The effort, yeah. That's a better word. Spreads out the effort of that and makes sure that it doesn't all wait until the end, where the thing that the consumer wants the most, that customer wants to, get that car and drive off the lot because they're excited about that new car. That's what we all want for them. So the fastest way is starting it early. And doing, checking all the boxes based on your understanding of what your lender's requirements are. So that means that you've talked with your lender in advance to review your fraud procedures, and you're not counting on them to do all the heavy lifting on confirming that consumer's identity. Remember, they're not seeing that person's across the desk for them like you are. They're not seeing the ID from that consumer. Generally speaking, they might be sharing some ID information with them, but they don't have all the physical things that you have in front of you. And so investing in the tools to help you do it properly and in compliance and consistently will speed that through the process.
So, I mean, you mentioned the fraud protect at the end. Is that something where, and I guess it's very new, but is it something where a salesperson could send that to someone who has not even come in? Like if they've booked a test drive, could they get that done before they ever get to the store?
Great question. Yes, it works just as effectively to send that link to someone's phone, whether they're sitting across the desk from you or whether they're talking to them on the phone and they're in 5 states away. It absolutely helps in all of those circumstances. And again, it's consistent, right? If you're using the consistent process, you'll get consistent results. Yeah.
Okay. Because it reminds me of checking in for a flight. That's how I look at it. Just those things that you used to do in person, just, multitasking, which everybody loves. Okay. Couple more questions here, Jim, for you. We got 5 minutes left. So lender chargebacks, what is the most effective way to avoid lender chargebacks? I mean, this is a huge part of fraud. As some people call it, friendly fraud, or there's so many words for this type of fraud with chargebacks.
So 2 things. One, again, collaborating with your lender up front to be in sync with their requirements and their understanding of your procedures, right? So you don't want that to be a surprise when you get a chargeback and you say, well, I didn't know I was supposed to do X, Y, or Z. You do that once and then you learn the story, right, of how to do it properly. But the other side of that is your process should not only be documented as a process, but you should have artifacts along the way of all the different verifications that you've done, so that if you do have a chargeback, you can say, well, here is, my procedure, or here is my documented procedure, and here are the steps that I took with this particular customer. That is sort of the proof positive that you are addressing your commitments. Now, that doesn't mean you're going to avoid a chargeback altogether. It means that it gives you a leg to stand on, so to speak.
Right. Okay. So a little bit of a case file on every single customer in terms of, all of those checks and balances that you showed us.
That's exactly right. And in particular, that photocopy driver's license isn't really going to help.
Right. Okay. It's 2026. We're well beyond that. Okay. So, one more question here, Jim. Fraud signals. So which fraud signals are most actionable at the point of sale?
Right. And I think the key phrase here is at the point of sale, right? If you are checking that person's identity up front in the process, it absolutely is the most actionable thing you can do. Because what we see,
Right.
people that use our solution and others in the marketplace, if you say, okay, well, I need you to validate, and we're going to take a photo of this, and I need you to do the biometric scan and XYZ, we see that fraudsters do not want to do that. We fear absolutely that people stand up and walk away. And it's those same people who the dealers are telling us, my spidey sense was tingling already. Right. So something seemed off about this deal. And when I wanted them to validate and take the photo of themselves to match it against the driver's license, that's where things, where the friction from the consumer side came in. So that is the most actionable thing that they can do right up front. Same thing as we talked about with for the other kinds of fraud. With the vehicle, check the information on it. Don't wait until you go to put it into your listings on your lot to check the vehicle history. And as far as income and employment, check it early. I know that there's again, every dealer's got their own policies and procedures, but if you're checking it or you think that you're going to be, do it earlier in the process. Don't wait because you'll get information that is actionable right then and there.
Jim, you're such an expert at all of this. I know you do quite a few speaking engagements on this topic. Thank you so much for doing this with us today. Any parting words before we close out today's webinar?
Well, the number one easy takeaway for a dealer and everyone in the industry is to stop and look at your process so that you can find create a consistent approach and then look at optimizing it. Talk to your lenders, talk to your insurers about their thoughts on best practices. Come talk to the industry folks like us, right? We have perspectives on this and we have solutions to address it. Also, our technology and solutions power a lot of other things that are available in the industry, so we have perspectives on them as well. So talk to the vendors that you work with so that you can get the best idea from them, and then you have to make a decision based on what your needs are.
All right. Well, great advice, Jim. That brings us to the end of our webinar. Thanks to today's audience for the questions. If you asked a question that we didn't get a chance to answer, our friends at Experian will follow up by email. If you learned something from this session, please tell your peers about it. The recording will be available in about an hour. You'll find it at autonews.com/sponsored/webinars. When the webinar ends, a survey will pop up on your screen. We genuinely appreciate your feedback as it helps us create future webinars that are even more beneficial to you. Thanks again to Jim and Experian for bringing us this presentation, and to you for joining us. On behalf of everyone at Automotive News, have a great rest of your day.